Back in action here. I wanted to do quick updates on a couple of names that we looked at. We said that, in my opinion anyway, I thought that they looked pretty good in the numbers and they were growing nicely and steadily. And we were probably going to see continued growth. And I know that markets are going up, and we just spoke about kind of everything across the board is kind of just continuing to run up. But again, in my opinion, these couple of companies, they have the numbers to back it up. And the first one we're looking at is Draftkings. And we recently looked at Draftkings, DKNG, after earnings. And we can see, I mentioned this support trend line that the stock pulled back into. And then, it popped up going into earnings. And then we were up and kind of down after these earnings came out. You can see, again, we missed big on the EPS side, missed by about 1.25% on the revenue side. Came pretty close, though. But overall, I said that, in my opinion, they were missing the big picture of the average revenue per player, as opposed to looking at the massive surge that we saw in regular average number of players visiting and betting in total, right? And that's why I said, in my opinion, I said, this is technically good news. This stock should really get back up above 40, no problem. And we can see that since those earnings have been digested, you can see that, again, the next day, the stock runs up, as you see, top left of the screen, OHLC, the open, the high, the low, the close. You can see the high for the day, 41.40. And now you can see today, we jump up, hit 43 and a third, close at 43.21, full 3-point day, almost 7.7%. So where's it going now? And, how do I feel about it? In my opinion, I do still like it. And on the technical side here, if we look at, again, going from this peak high, as you see, this was when we almost hit $50 back in March of 2024. And then we had a big drop, and then we spiked back, pulled back into earnings. Now we recently popped back up, right? So if we go from that high, 49.57, and we connect just to like the previous high and then like the second high, right? These are technically your resistance trend lines. And you can see that as the stock jumped with earnings, as they pulled it back, you can see it broke slightly. Let me zoom in. See how it broke slightly below this trend line, almost met up with the moving average, ended up bouncing, closing above it, technically signaling bullish momentum. Then we jump up, try to test this fib, drop down a little bit, close, still technically bullish. Then we have a big swing, right, up and down, but still technically bullish. And then today, boom, we pop up above, clear above this second resistance level, and the stock is now sitting halfway between this top line resistance and all-time resistance. And as you see, hypothetically, if this happens tomorrow, we're looking at about 45.5. So, in my opinion, we do still have room to run. And I do think that, I spoke about how when, economic times get rough, you see sometimes more revenue flow into alcohol companies, betting companies. We've seen DraftKings doing very well over the last couple of years, growing their business, collecting revenues, beating estimates for the most part. So that's why, again, I kind of jumped the fence as well once the numbers readjusted to the market cap of DraftKings. And I said, like, it was around like in the 20s, and I was saying, in my opinion, this should get up to 30. And then we kept doing earnings updates, and I was saying, in my opinion, there's a $40 stock, this could be a $50 stock. And the numbers really keep growing. And for the most part, I believe everyone's pretty bullish on it. Yeah, we can see we have one low price target here, average price target 51, highest price target 77. We currently have 37 analysts looking at this situation, 29 giving it a strong buy, 3 giving it a buy, 5 saying to hold. No one is advising their clients to sell shares of DraftKings. I think, in my eyes, that should tell you everything you need to know. And again, even if we don't shatter these estimates, look at the jump we're expecting here. We're talking about 400 million jump roughly over the next couple of quarters. Above 1.5, back to 1.5, 1.4, almost 1.4. So again, we're coming from the high. Remember, we started 400 million. That's when I said we were overvalued. Then we jumped up to the high 800 millions. I said, okay, we might have a player on our hands. Then they, again, continue to expand the sports book, grab new markets, team up with other teams and whatnot. Boom, now we're at the billion mark. So it looks even better, technically. And now we're expecting 1.4, 1.5 billion. So if these trends do continue, overall, the growth of the business, in my eyes, cannot be denied. which is why $50 price target, $60 price target, in my opinion, I do have to agree with that. Now, again, obviously, big EPS miss. I think we mentioned it. I think it was like a tax situation. I don't know. In my opinion, again, a lot of the stocks, a lot of the news is kind of running together. But moving forward, we see that we're looking to get EPS positive the next couple of quarters. Expecting a loss there. Again, that may be another tax implication here. So maybe we have Q3 struggles maybe. But we'll see what happens. But again, even though we were saying technically that during rough economic times, people may gamble more. Remember as well, on the flip side, now we have a Trump administration within about the next 2 months till he gets sworn in. And then if we do implement policies to make the dollar stronger, get a lot of costs in check, whether it's groceries, whether it's energy, right, across the board. If all of these costs are going to come down a little bit, or at least stabilize, and we're going to strengthen the dollar a little bit more, then what's going to happen? People are going to have a little bit more discretionary income. So what's going to happen? They're probably going to bet the same or more, right? So that's why this is a very interesting situation. And that's why it could kind of work out whether times are good or bad. But again, I did also mention that during rough times, this would be technically a good performer. And we can see that the stock has really held up pretty well over the last couple of years. But on the technical side, back to reality, we did get above these resistance trend lines. And again, I'm looking at 45.5. And let me show you here. See if we back up. We kind of exploded right out of the gate and then pulled back right to where we were and then kind of slowly started to run up from there. But if you go back to this high here, you're talking about 74. Can't even see. You're talking 74.38. That was back March 22nd, as you see, 2021. And then if we just draw it from that high to this last previous high, where all of our resistance trend lines just came from, 49.57, you can see we cut across and boom. It looks like that's right where the stock wants to go. Right? So in my opinion, I'd say short term, you could see 45.5. But of course, remember, we just had big volume come in, right? We're on the up and up. We just chunked up from mid 30s now to low 40s just within a couple of days. So I understand markets raging, but again, just keep in mind that we can always come down and retest, hang out, and then jump up, right? So just something to keep in mind, in my opinion, for all of you options traders out there. It may not be immediate, and you might have to deal with that theta decay and consider rebuying if you want to take a new position, or of course, as we say, if you bought some time, you can average down if the calls take a hit, right? On this pullback, boom, add more, and then boom, catch the next leg higher. So, of course, a lot of you know what you're doing, so you could play it by ear. But again, everyone always likes to talk about RSI. That's why, again, we can see on the daily here, RSI 73 1/3. Right? So technically we're above the benchmark. We just had, look at this, big white candles, black candles, whatever color you use. But you can see we're above both moving averages. We just broke out above the top Bollinger Band. And even though we do have that top line resistance, we could technically see the argument that we're overbought, which is why I'm saying we may drop and retest and then pop back up. But 73 1/3 on the RSI. MACD recently crossed to the upside and broke up. And obviously that helped the entire situation. Let's check how we look on the weekly here. Yeah, we can see we're above the top Bollinger Band as well. 42.74. We closed 43.21. So, of course, the whole vibe, if you will, is technically still bullish. But as the RSI gets overextended, this is why we might have a pause for a day or two and then just kind of continue business as usual. But technically, we're still above this 50-day moving average here of 39. Stock's about 10% higher than that. And it's looking pretty solid here in my eyes. Looking pretty steady. RSI on the weekly time frame sitting at about 60. So that's why. Could we have a red day now, 1 or 2 red days on the overextended daily RSI? Yes. Could we then, over the longer term time frame, continue to run up? In my opinion, yes. So again, just a couple of technicals to keep in mind. MACD again was about to cross to the downside. We had the nice bounce getting back above the mid Bollinger Band. We had the MACD cross on the daily, And then, of course, we had, in my opinion, what were some decent numbers come out on earnings. So again, initially, technically a miss, yes. Overall, does it look good? Again, in my opinion, yes. And we can see that the stock has been getting rewarded after initially getting kind of those mixed results. Now it seems like everyone's like, oh, no, 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 this is good news. This company's growing. I'm buying. That's kind of, in my opinion, the kind of status behind DKNG right now. But let's just see out of curiosity if there was any recent news. But I just wanted to do an update showing that, again, depending on what numbers you looked at, some people may have been upset. But in my opinion, overall, I thought it was a pretty good report. And that's why I said stock should get back to 40. And you can see, again, it's been on the up and up. And we might get up to that top trend line resistance. DraftKings stock seen as compelling on 2025 prospect. The setup for DraftKings shares is compelling at the moment, says Mizuho. Sports betting company would see gains if it beats its own guidance for 2025. Yeah, well, obviously. As well as if its results come in line with its outlook due to elevated external marketing spending as a result of an accelerating consumer acquisition environment. Say that 10 times fast. Expects DraftKings to report handle growth of 15% to 17% in 25 versus 24, as implied in DraftKings' 2025 revenue guide. So, again, that's why. If we were looking for $1 billion, $1.1 billion for the last 3-4 quarters in a row for last year, now we're looking for $1.415 billion. Well, yeah, now we're expecting to go from like $4.5 billion. Now we're expecting, as they said, $6 billion in change plus for 2025. So that's why, again, whether some quarters beat, some quarters slightly miss, the overall picture is growth, and as they cite here, accelerating consumer acquisition. And also, we looked at, again, the average daily, active players on the site, on the app. And that was well above expectations, showing big growth. And the fact that, as I said, the average revenue per user was $103 instead of $112. That's what I mean. In my opinion, I wouldn't look at it that way. I would look at the volume of people using my service as opposed to how much the average person bets on a weekend. You understand? And that's why I think that Wall Street agrees with me over the last week since earnings, basically. Deutsche Bank adjusts DraftKings price target to 33 from 32, maintains hold rating. That stuns me. That kind of stuns me. And it's amazing, right? That something like DraftKings that's actually growing over time gets a low price target. But others that technically haven't proven themselves, people may be over bullish, right? So it has to make you laugh sometimes. Maintain outperform, price target raised to 51 from 50. Maintain overweight Barclays, price target raised from 45 to 50. Yeah, I'm not reading all that. It's Axe article. Maintain that market outperformed by JMP. Price target raised from 51 to 52. What, they all collaborate in a memo together? All right, everyone raise your price target by $1. The hell's going on? DraftKings price target maintained 60 even by Needham. Respect. And this was from a couple of days ago. Okay, so yeah, technically we did kind of just look at the stock 4 or 5 days ago when these earnings came out. So other than those price targets, we don't have much news. But again, I did want to just reiterate how I was feeling about the situation, digesting those earnings. And I wanted to show you again just these trend lines and this potential top resistance level where we might see the stock soon at roughly 45.5. But let's check the pivot points real quick, because I wanted to look at this and I wanted to look at SoFi also. We can see, look, last month, look, we had a pivot point basically right here where the stock stopped. So that's why, again, you may see a slight retest, RSI adjustment, and then we might break up and out. And you can see last month, this was a pivot point up here, looks like about 47.25. So that's why we may potentially catapult even up and out, almost like we saw with Dutch Brothers, BROS. And we might just shoot up above that long-term resistance and just hold there. Keep going, maybe. So, only time will tell, of course, as we always say. But in my opinion, it does kind of look good in the numbers and in the technicals. And we can see 46.07. So we could potentially have a flash breakout to 46 and then kind of come back. So we have to see. We have to see. Because I kind of personally predicted something similar might happen, like I said, with Bros. And Wall Street just decided to completely pop it up and out. And they kind of, again, in my opinion, saw the growth. They looked at the big picture and they said, no, this stock has to be rewarded. And that's why it kind of broke up and out. That's how I'm looking at it anyway, in my opinion. But let's look at SoFi also. I wanted to do an update here on a couple of stocks we looked at. SoFi hitting new 52-week highs today of 1444. Now, of course, if you follow my channel, this doesn't surprise you at all on one hand, and also on the other hand, you should have a cost basis of the low sixes here. We did a couple updates over here. We mentioned the long-term wedges lining up. We looked at the growing revenue and earnings over the quarters, which cannot be denied, and we can see that the companies with established businesses and growing revenue track records are the ones that are now breaking up and out and being rewarded. So SoFi raging. Again, if you watch the channel and just listen to my opinion, again, it was in the low sixes. And I don't want to hear about it in the comments about who likes it now, who else uploaded a video saying they're buying it. I do not want to hear it. I had people even commenting on my video that I didn't know what I was talking about. Stock was going to break 6, continue to hit new lows. Everyone on YouTube was saying the stock should continue to slide. We should continue to hit 52-week lows. They wouldn't touch it. They don't know why people like it. And now, as we get to 10, 12, literally, as I said, once it breaks up and out and they see they were wrong and they missed the boat, then they're going to tell everyone that they like it. You should jump on board. You should ride the wave. You should follow the trend. Johnny come latelys. So if you follow these other quote-unquote YouTube hobbyists, I'm sorry to go after them again. I was actually a Series 7, Series 63 licensed financial advisor. So I gotta, be a little cocky and arrogant sometimes to put a few people in their places. But again, in my opinion, I said, if I had more capital, I would be accumulating shares, building a position in SoFi because they have the numbers to back it up. And if you kind of took that viewpoint and ran with it, you can see you're up roughly 130% just over the last couple of months. So SoFi performing phenomenally well. And right now we have a $15 billion market cap we're up to. But hey, listen, you can't tell me the numbers matter, right? Because we look at stocks like ASTS and Rocket Lab that technically aren't established businesses, and they have half that market cap value. So if a company that really hasn't even gotten its feet wet and started doing business yet is worth $7.5 billion, then yeah, a company that's consistently beating earnings more times than not and growing like a freaking animal, yeah, they should be 2-3 times worth what that company is, right? That's just simple logic and common sense. So SoFi, absolutely raging, getting up to almost 14.5. Very happy for all your shareholders who jumped in on this one. Look, SoFi hits hot. Is it time to take profits? It was going out of business, hitting lows, no one wanted to touch it. Now it rages, and they're saying, oh, should you get rid of it now? It is just laughable. And if you want to know, again, how I'm right more times than not, and how I see what could potentially be coming on the horizon, and then all of a sudden, 3-4 months later, it comes to fruition, it's because, again, I know I have many years of experience, and obviously you can't beat yourself up personally for that, right? Because it's just going to take time. You're going to have to put the time in, experience how these trades work, how some stocks move, off good news, off bad numbers, and then, you'll eventually get to that point. But also, more importantly, this is why I laugh when people try to put down fundamentals. How dare you? The actual numbers behind the business, you're telling me, don't really matter because we trade electronically and it's all about technicals. Shame on you. Because remember, you looking at the technicals and not looking at the business said SoFi was not a buy at low sixes and it should continue to hit new lows. And now it's up 130%, hitting new highs. So I'll just put that on the record. Maybe I'll get a couple of pats on the back in the comments. Rallied over 30% since election day, makes expectations that it will benefit from a more accommodative regulatory backdrop under the new government. Part of the recent upside has been related to peer upstart that talked of improving credit trends. Despite the massive red, there's reason to believe that SoFi is not out of juice just yet. SoFi remains attractive, expects it to eventually be one of the biggest U.S. banks. Quote, it's a matter of when, not if, especially at the rate at which they're growing. Men lie, women lie, numbers do not lie. And you can ask, the people in Discord could attest to this. Every single time someone mentioned, oh, this YouTuber just said SoFi's not a buy. This YouTuber said SoFi's going to $5. I was in there laughing my ass off, saying I wish I had the liquidity and the capital that most of you have, because I'd grab every share in sight. I'd be off to the races, I'm telling you. When I started this channel, if I had that liquidity that some of you had, a couple of 100,000, a couple of million, I would be gone by now. Gone. Men lie, women lie, numbers do not lie. The fintech firm has increased its revenues by more than 20% over the past 17 quarters straight. But it was worth 5. It was going to hit new lows, right? More than 20% over the past 17 straight quarters, despite higher interest rates that weighed on its lending business. So imagine we had Trump the whole time and rates were kept in check. Are you kidding me? Are you kidding me? 14, stock would be at 34. And the momentum will likely get stronger only now that the Federal Reserve has started cutting rates and Donald Trump is slated to take office in the coming months. The U.S. Central Bank lowered its key interest rate by another 25 basis points. Yeah, who cares? SoFi looks particularly well positioned as it's seeing rapid growth in members and products. Now it's well positioned, right? No one would touch it with a 10-foot pole. Now it's well positioned. Personal finance company saw a 35% increase in members and a 31% increase in products in its third quarter. Still, SoFi shares are unattractive for income investors as they do not currently pay a dividend. What a dumbass statement to make. By that logic, Nvidia should have been unattractive over the years as well, because they only recently started paying out a dividend, right? Yet everyone and their brother's like, oh, I wish I bought it. I gotta buy. I don't care how high it is. I gotta buy it. I gotta own some. We may eventually have that same mentality swirling behind SoFi shares. Are SoFi shares overvalued at current levels? Well, people tell me fundamentals don't matter, so why is that even spoken on? About 20% of Americans are currently looking for a new credit card and a new savings account. Okay. That could translate to more business for SoFi. Yep, probably. SoFi also offers checking accounts and investing solutions, so it's fair to say that it has successfully transformed from a student loan expert to a full-grown financial services company. Yeah, it always was. People just, again, that's what grinded my gears as well. The whole time we were looking at it, and they were consolidating it in that 6, 7, 8 month long-term descending wedge. I said, in my opinion, the numbers are there. People are only talking about interest rates. They're talking about it as a student loan company. But in reality, it is an overall financial services business that was seeing essentially revenue growth and member growth increase year over year significantly well and consistently. So overall, that's what I mean. The business was growing well. And anytime they tried to bring it down, oh yeah, student loans, Biden said he was suspending payments. Oh, interest rates are up. We got to bring SoFi down low. When you see the writing on the wall and you look at the long-term growth of the business as opposed to a short-term weekly trade, then when they beat a stock like this down to 8, 7, 6 and have it hit new lows, you do not get upset. You take a step back, you say thank you, and you accumulate shares and build a position. Again, this is essentially the Buffett method. The man who has over 80 years of market experience, bought his first stock when he was 11, and now essentially anything he says or speaks about becomes frickin' rule of law after he says it in an interview. I remember years ago he used to say, well, if you really want to see when the markets drop back down, at the time, yields on the 10 and 20 year were significantly lower. And he used to say, well, if you want to see when markets are going to stop rising and have a little bit of a pullback, all you have to do is watch the 10 year. And if the rate gets above 2.6%, then you know that, you might be due for a pullback. Any of you older investors in your 40s and 50s, please let me know down in the comment section if you recall him saying that in that interview. Of course, it was on CNBC. And again, I'm talking, 10, 12 years ago when I was a broker, but I know I heard it. And then all of a sudden it became a rule. It was like every day for months after, as the analysts, as they are, I guess they are analysts, whether we agree with them or not, but as the analysts on CNBC were coming out months after that interview, all of a sudden they were all saying the same thing. Yeah, well, markets are up. This company looks strong. This company reported good numbers. And look at the 10 year. It's only at 2.4%. So we still have more room to grow. You see what I'm saying? He said it. Now it became rule. Now all of a sudden you're all looking at the 10 year and you see it's not at 2.6%. So you see more room for growth. Same thing with his terminology. They asked him, oh, why'd you take a position in Apple all those years ago? What'd he say? Oh, the product's like very sticky. That's literally the specific term he used. It's a very sticky product. People like it. It's a status symbol. They're going to remain, a big name in the space and maintain that market share. I think it's going to be good for years to come. All you freaking heard from these sheep, these idiots on CNBC, was the same term used over and over. Well, yeah, we like Apple here, their product's sticky, we're telling our clients to invest in Apple. So everything he says essentially becomes rule of law. And then the actual way in which he made billions of dollars, which is the way I laid it out on this channel, when it came to SoFi, I said, in my opinion, look at the business. You should be saying thank you. You should accumulate shares and build a position. To not utilize the Buffett method to improve your financial situation is so incredibly foolish, I cannot even put it into words. It's that damn simple. So as we say, you want to take, 5% of your portfolio, do some YOLO calls, lotto calls, as the kids call them. You want to do some earnings plays, see if you hit, great. If you miss, it's not the end of the world. I understand. We know we're all in different situations financially. But at the end of the day, we're talking about the bulk of your capital, what needs to be growing for you and your family over the years. To not invest this way, or at least take it into consideration looking through this lens, in my opinion, is unforgivably foolish. It's that damn simple. SoFi also offers checking accounts and investing solutions. Yeah, we read that already. Such diversity in its business model could help boost its stock price as well. Yeah, thanks. Note that SoFi stock is currently trading at a 1-year forward price to earnings multiple of close to 61. Ooh! When Tesla's forward 1-year PE was 248, no one cared and they kept buying it. But they got to mention that SoFi's forward PE is 61. See what I'm saying? See what I'm saying? While that isn't cheap by any stretch of the imagination, it isn't too unreasonable either. For a company that grew its revenue by 30% on a year-over-year basis in its latest reported quarter. I want all business owners down in the comment section, have these younger traders ask you if you see business and revenue growth of 30% year over year. You'd be surprised at the responses, my friends. Wall Street expects SoFi Technologies to earn 12 cents a share this year and more than double that number to 28 cents per share in 2025. Well, Wall Street loves more and more profits, right? So there you go. Should be on the up and up. With expectations of such significant earnings growth over the next year, shares of this fintech firm shouldn't look all that expensive at current levels. Isn't it interesting how it wasn't a buy at 6, but now as it breaks out to 14.5, it looks overvalued in the numbers, but it's still cheap and it could still grow. Because what did I tell you? They want to take the spotlight off of it, have it fly underneath the radar, have you forget about it, have it down at those lows at 6, pop it out of the wedge, 10, 11, 12, then get it trending, then bring it back to your attention, get you involved at 12, 13 when they were buying it at 6, 7. Now you're buying at a more expensive price, but you're helping to pump up their lower cost basis because you're the new volume pumping it up. You understand? And now that it's at 12, 13, 14 hitting highs, now other YouTube hobbyists want to talk about it and take a position. Now articles come out saying, oh, well, even in the numbers, it's undervalued. Maybe you should buy it. We're already up 130%. I don't need you to tell me it might still be a buy at 14. Because on this channel, we owned it between 6 and 7, conservatively. Right? You understand? Can you hear me now? Can you see me now? Shout out to Brock Lesnar. SoFi just too damn good, man. Shares are up 5 trading days in a row, gained 28% over that window. Again, coming off of a 52-week low, now we're up 30% in a week, hitting new highs. On track for their best 5-day stretch in more than a year. When no one wanted to touch it, all of a sudden, best 5-day stretch in more than a year. Isn't it amazing how the story immediately changed like that just over the course of a month or so? 2 possible factors driving recent gains include a strong quarterly earnings report. All of a sudden, earnings matter. They were beating earnings the entire time. Remember when they brought them out of the spotlight and kept them in the wedge? This is why I say, look at the numbers, look at the business, work smarter, not harder. And I don't care if I sound condescending, because I consistently prove it time and time again on this channel. End hopes for a less restrictive regulatory environment following news that Donald Trump won the presidency. Yep, stocks are trading. Yep, oh my goodness, we're still talking about GameStop. Jeez. So, SoFi rocking and rolling. Let's check stock charts real quick. We can see next pivot point on the weekly, 1596, RSI up to 82.5. And remember, the RSI might be overextended. And when it's something like SoFi that all the kiddies on YouTube and the hobbyists and the traders missed, now the RSI is relevant and it's at 82.5. It needs to come back down to earth. Go look at ASTS when I was saying every day that we had to pull back. And it continued to go up, 90, 95 RSI, right? That's what I mean. In those moments, when it's a meme stock, nothing matters. Technicals, RSI, pivot points, fundamentals, nothing matters. You don't get the vibe. You're missing out. Then on something like SoFi, an actual real investment that deserved this breakout and this growth, all of a sudden, oh, well, look at the RSI. Look, it's well above the moving average. It needs to pull back now. Get the hell out of here. Go suck a railroad spike. Are you kidding me? How dare you even speak to me and have that argument? How dare you? RSI straight curling, beelining to the, MACD straight curling, beelining to the moon. RSI 82.5, but again, it's not real unless we want it to be. Next resistance level up at 1596, in my opinion. Let's get it. Looking at the daily, we had a pivot point right here at 1401, closed at 1411. RSI, look, up at 84, but it doesn't matter. And we can see, technically, we closed above this resistance level, which means what? Where are all my technical traders? What does that mean? We know the rules. That means it's bullish still, which means $16, in my opinion, should be a layup. That should happen over the next week or so. Again, the numbers, none of it matters. until they want it to matter and they miss the boat. Just keep that in mind. But technically bullish, in my opinion. Let's check the Bollinger Bands. Oh yeah, we're flying high, baby. We trumpet it up and down. It doesn't even matter. This stock is in uncharted waters right now, basically. On the 52-week range side, I'm referring to, not all-time, of course. Technically, uncharted waters does mean all-time highs. But, yeah. I think I made my point. Got upset enough with something like SoFi. There was something else. Oh, Honest. You guys remember that one? The Honest Company. Keeping it honest. Oh, look at that. Look at that. See, over here, nobody want to talk about it. Kaboom. Down, down. Wait, but the numbers are growing. Why is the stock down? Why didn't I wake up overnight and make 100%? Shut the hell up. Say thank you. Accumulate shares. Build a position. And now, kaboom. You're up 100%. If you have any questions, dial information. Thank you for calling. Stock right now closed at 486, up almost a full half a point, 10.7% on the day, hitting almost new 52-week highs on the day, now hitting new 52-week highs after hours, 494 currently, up another 8 cents, 1.6%, $5 in my opinion, incoming, because we looked at the numbers, we looked at the business, we looked at the growth of the company consistently, and it didn't matter. It didn't matter where they brought it down, where they brought it up, where they dropped it back down. It didn't matter. This is why I'm saying, in my opinion, take a step back, look at the broad picture, look at the long-term picture, look at the numbers, and when you see the growth is there and you see an undervalued situation, you buy. It's really that simple. So, Honest, HNST, as we see here, just absolutely raging. Again, up to almost $5. We can see these previous highs. Again, we're 480, mid to high 480 range, 489 right here. And now you can see technically after hours 494. And again, you're seeing not only a breakout of technicals with solid numbers to support it, but also, as we said, with SoFi, as we said, with Draftkings, the stocks that are showing growth in business and consistent earnings are the ones that are being more rewarded. So yeah, we back up here again. Yeah, we can see, look, yeah, this last drop here where the stock flattened out was at about 503. That's probably where it's going. And then the top end of that range right there is about 619. That's probably where it's going. And then this bottom level here where it dropped down to is what, 7.25. That's probably where it's right? There you go. Now you have some pivot points, some price targets to keep an eye on. We drop it down out of the gate because we're overvalued like every other stock. Straight down, bottom out, the recovery. Phenomenal. Absolutely phenomenal. We probably don't have to, but let's check stock charts real quick for Honest, and I'll let you go. I just wanted to do an update on those couple of names again, because we can see that the growth was there, and they did kind of quiet down. Maybe some earnings reports reviewed as negative, some were kind of mixed. We didn't see much movement, and now all of a sudden, they're all trending. Everyone wants a piece. Do we go higher now from here? Right? That's what I mean. That's why you have to buy at the discount. You don't wait for it to break from 2.5 to 5 to analyze it now. You missed it. Just like when people ask me, IBM at $212. Oh, is it a buy now? I don't know. I don't know, honestly. And of course, I don't want to be wrong. I was raised by a man who strives for perfection. So, I don't want to be wrong. Yeah, I still like it. But I also said I liked it at 160, 170. Now it's at 212. So you would have been up already 25%. So, you know, I don't know what to tell you. If it goes down before it goes up, that's your problem. That's not my problem. But RSI here on the weekly, 66.5. Technically have more room to run. Also, high of the day, 486. Close at 486. Where are my technical traders out there? What did that form right there? What did that form right there? So in my opinion, 5+. That should happen tomorrow. Might happen in the next 30 minutes. Who knows? MACD recently crossed to the upside. This baby should be on the up and up, in my opinion. Switching over to the daily. Look, again, RSI only matters when they want it to matter. Because they didn't buy it at 2.5, 3.5. Now the RSI matters. They wanted to pull back to sub 4. Too bad. You missed the boat. 77 and 2/3 on the RSI. But we can see in the past, we've gotten above it and hung out there for a while as well. So just because we spiked up doesn't mean we immediately have to drop down. So that's why we may keep going for a little bit. And then it may start to cool off a little bit. But pivot points real quick, I'll let you go. Up above 453, we can see, what's this? 495. That's where we are right now. We're at previous resistance. We're going. Switch over to the weekly, I'll let you go. Next pivot point, 539 and a third, in my opinion. Get it. Locked and loaded. And that's pretty much it. So I'll end it there. Once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time, and have a good day.